Hey guys, today we want to talk about health insurance and self-insurance and the mix. And we're going to get into this a little bit. A lot of people always write to me and they ask me different questions like, hey Steve, I got $100,000 put aside. Should I do the regular insurance? Should I do a mix of both? Or should I do like a totally self-insured thing or whatever? And it's kind of hard for me to tell you what to do on something like this. So I want to get into this a little bit because it's something you should be thinking about a lot. And maybe I can kind of help you, guide you through this a little bit by telling you what I do, okay? And what I do is I picked one of the lower priced Pacific Cross plans. It doesn't pay a lot. It pays about $30,000 for, let's say, if I have a big incident. Right now I'm healthy enough that I'm lucky enough that I can get that. Now remember, keep this in mind, that if you go with Pacific Cross, you have 1 year where they barely cover you because they're waiting to see if you have any pre-existing conditions or what have you. So you got to kind of be careful because that means you're going to have almost no insurance for that year. So I have insurance now and I'm okay. And I did list with them my pre-existing conditions because they're covered by the VA, so I'm really not worried about that. But here's the thing, you need to kind of weigh all this stuff out. Now, I do a mix of health insurance and then covering myself. Okay, so if it goes over a certain amount, I know I'm going to have to cover myself. Now, it's up to each individual because it depends on how much money you have aside. And a lot of guys coming over here, they don't have that. And there's also like this thing out there that a lot of people think like most people don't live in the sweet spot budget. You might be quite surprised because I'll bet you that more than 50% do live in the sweet spot budget. It's just that maybe in your area or whatever in the Philippines, a lot of guys don't, okay? A lot of the guys down in Cebu, they live in the sweet spot budget. A lot of guys around here that are in part of our community, a lot of those guys live in the sweet spot budget. They do okay. They're not overly wealthy, but here in the Philippines, we are wealthy. We're considered very wealthy. So if you're in a good spot like the sweet spot, what I say is, and that's the 2,000 to 3,000 or above range, usually you can not self-cover, you can get your own insurance, okay? And you can do a mix if you want to. But if you're in that sweet spot, the sweet spot budget was designed so that you could totally cover yourself and you wouldn't have to self-insure, okay? But if you wanted to, you kind of could. You could make that decision because you could save a little bit of money and put a little bit of money aside for when you got sick or for your outpatient things. Because remember, most insurances cover inpatient unless you buy the outpatient coverage. Outpatient coverage usually only covers like a certain amount. And some of these insurance policies, they only cover like 500 or 1,000. You can cover that out of pocket, let's face it. In most cases, you can cover that out of pocket. Why would you put that on your insurance and pay that extra amount or whatever when you can just do it yourself? Because a lot of times I don't use that much outpatient. And here's the thing, I use the VA. So every time I go into the VA, I get all my blood work done. They tell me pretty much how healthy I am. And it lets me know where I stand. So that kind of gives you like a little assistance too in figuring out what you should do. If you have high blood pressure, you have high cholesterol, those type of things, you're going to need to have, you might need something in the future. If you have high blood sugar, those things all matter to you when you're looking for insurance. Because if you have diabetes or pre-diabetes, it might cost you a little bit more for insurance then. And also, what I tell people is this. When you're shopping around for your insurance, make sure you read all the small print. Make sure you read everything and tell them, hey, I want to look at this, this, and this. Okay, make sure you know what's going on with that insurance, because some of these insurances can be a little bit shifty, like with the way they word things and things like that, making you think you're getting a lot of coverage, but in reality, you're really not. So when you call them up and say, I want to get covered for this here, I'm in the hospital right now. Oh, sorry, sir. You didn't read the small print, did you? And that's where they get you. But Pacific Cross has had a pretty good reputation with a lot of the expats that I've talked to for taking care of things. And that's a great thing to have, okay? But as far as making that decision, here's what I want to say. If you're in the sweet spot, get full insurance. Now, if you're in the range of like 70 to 80 or in that range there or above, it starts getting a little bit expensive. But if you're in the upper end of the sweet spot, it's still worth it. And they still have coverage for the elderly in Pacific Cross and some of these other plans. And you can call Pacific Prime also, and they give you 10 different quotes. And I mentioned this before, Pacific Prime is not Pacific Cross. But you can go online, look up Pacific Prime, and then they'll send you 10 different quotes. And the guy I deal with, his name is Steve. He's pretty good, but you can contact them online, and they'll, give you all the information. You just tell them what type of insurance you're looking for. Most of the time, you don't need $1 million insurance. $500,000 insurance is good enough. But if you feel you want the $1 million insurance, get it. And in most cases, most of these insurances that are expat insurances will cover you everywhere except the U.S. and sometimes the U.K. or Australia, depending on where you're at and where you're from. They usually won't cover you in your home, where your passport is from. For some, usually it's like the U.S. They won't cover the U.S. I think some of them won't cover you wherever your passport is. It's expat insurance. So that's what you have to look at. You have to kind of weigh all that stuff out. But there's Cigna, there's all these other insurances out there. Everybody swears by their own insurance. I gotta say, Pacific Cross is in the Philippines. That's easy to deal with because it's in the Philippines. It's easy to contact people, easy to get in touch with people. And also you get a card when you go into the hospital. And if it's one of their affiliate hospitals that they work with, then what happens is they pay them directly. In some cases, with some of the plans, you just show this card and it pays them directly. Now it depends on which plan you have, obviously. So you need to, figure out which plan you want, which one's best for you. And like I said, some of them that pay out big and cover everything and give you more coverage, guess what? It's going to cost you more. And you're going to pay quite a lot more, okay? I myself am ready to switch to a bigger plan eventually. Now, if I switch to another plan, guess what? I have to wait out that year. So if I'm ready to switch, I need to keep another plan in place till the other plan kicks in. So I would get 2 plans then and have the other plan and wait out a year, even though they already have the other, it's through the same company. Sometimes some of these companies, that's the way they want to work with you. So you got to be careful. And I'm pretty sure that works with my plan too. I'm waiting for a phone call from the girl tonight. She's supposed to contact me. But last I heard when she was talking to me, she said, if you switch to another plan, you got to wait another year. So I'll just keep my plan in place because it's cheap enough. It's like $1,400 for my plan, and they used to call it the peso plan or something like that because it was paid out in pesos, and the other plan is in dollars. So I kind of go back and forth, and I call one the peso plan, one the dollar plan. They have a different name for them, of course, but it's basically a peso plan. It's for Filipinos, and me not being Filipino, it's I look at it and it's like, wow, this isn't even hardly any coverage. But I could self-insure myself to a certain point. Okay, and if worse got to worse, I could always go back to the States and I could get some insurance back, some coverage back there through some other things that I have going on. But weigh out everything. Some guys have VA benefits. They can go back to the US, they can get coverage back there. But if you're really sick, let's face it, you have a heart attack or a stroke, you're not getting on a plane going back to the States and getting treated back there. You need to be treated here. So you have to make sure you have that coverage. Make sure you have credit cards for emergency or whatever. And you don't want to go into debt with medical debt. That's the worst debt there is. So be really careful. So like I said, what I say, and this is where I'm going with this, is the best coverage is total coverage. Okay? If you can afford it. If you can't afford it and you have some money on the side, you might think about using some of that money on your side to cover yourself, and do it that way. Maybe it'll balance out. You gotta figure out everything and do the math work, because when you hit your 70s, it's gonna go sky high. Maybe it means lowering down to a lower plan, so at least you got some basic coverage. But God forbid you get something really bad, like I said, a stroke, heart attack, cancer, things like that. You might not have all that coverage you need or you want, and that's when you're gonna need the coverages later on. Okay, so you want to make sure that you're totally safe. A lot of people are saying, well, Steve, geez, I'm on $1,000 budget. What can I do? That's kind of, kind of, cornered yourself there about what you can go out and get. Is there plans out there that you can get? Sure there is. The Pacific Cross, like I said, the peso plan is fairly reasonable. Again, I have that right now, but I also self-insure to a certain extent too, both for outpatient and anything over that $30,000 I have to come up with. So you want to make sure you're really, really safe. That's the thing that's most important to you. And you need to figure out where your safety level is, because if you go past that and then you're kind of stuck, because your finance, you can't go beyond that because you don't have the money to cover it. So for me, I tell people, man, if you can cover yourself in full, do it. Do it 100%. And then later on, as you get older, maybe you want to take a little bit more risk. Maybe you don't. For me, I figure if I'm 75 or 72 or something like that, and maybe it's time for me to go, and I'm okay with that, but I do want to have some coverage so that I'll be comfortable in a hospital or what have you, and also you remember later on, if you get sick and you're damaged, you have disabled from a stroke or whatever, you have a lot brain damage or something like that, make sure you have people that can take care of you. Put you in a nursing home over here for it's like $700 a month or less than $1,000, including food, and you're going to be well taken care of. There's a TV there probably, and at least you have people around you that love you and take care of you and will come in and check on you. Your friends will come there, check on you, make sure you're all right. And that's the great thing, again, about being in a community that will look out for you and come see you once in a while. Even if it's once a week or twice a week or something like that, at least you got some friends coming in to see you. All this weighs out in your plan for both insurances and getting sick. All this comes into play, and a lot of people forget about that. God forbid you get sick over here and you're a loner and you live alone and you don't have a girlfriend over here, you're up the creek, literally, and it's not going to be fun, because if you can't get down to an ATM machine to pay people, or you don't have a friend or something like that can help you out, or if you have a stroke and you forget all your passwords and codes, you need to have those someplace where they can find them. It's a whole different ball game living in a foreign country and traveling and being alone, or living someplace and living alone, or even with a girlfriend. You need to make sure you have a place where you have all your codes so people can do your stuff for you. Anyway, guys, I want to talk about that today. We've talked about that before. So for me, either I would say if you have enough money and you got 50 or 100,000 or 30,000, you could probably do a mix of both. But if you're really in a sweet spot, just get total coverage. I'm actually bending towards total coverage right now. I'm getting ready to get my Social Security in a couple more years, and I'll have enough money that I can get total coverage and I'll be safe. And if I want to, I could get it now, but I just don't feel it's worth spending that extra money when I can keep it in my pocket when I'm still fairly healthy. God willing, I stay that way, But anyway, guys, God bless. Take care. I hope that kind of helps you in your decision. Please don't send me any emails asking me, hey, what about me? This is where I'm at. What do you think? It's a thing that you have to kind of weigh out yourself. I don't like to make somebody else's decisions because I don't know about your illnesses, your sicknesses. I don't know if you have VA benefits. I don't know, what you have for insurance coverage. I don't know how much money you have in the bank and all that stuff. So I can't really weigh that out for you. It's a decision everyone has to make for themselves. But anyway, guys, God bless. Take care.